Hey guys, today we're talking about how to invest in a low market cycle. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisory Group here at Canaccord Genuity Wealth Management, and today's going to be a fun one. If you'd like what we're talking about here, or you want to have maybe a chat with us, book a no obligation free consultation, go to www.speaktorob.com and we'd love to book that for you. All right, so low market cycle. So now we're talking about kind of the emotional cycle or the bottom, if we will, of a market. So traditionally, you've likely seen the, we'll call it the emotional cycle, and then we'll also take a look at the true cycle of markets, right? So something like that is kind of generally what it looks like. So the low market cycle is obviously the low point here. We're talking about somewhere in here. And here's how it generally works for those of you who've never seen this. So over here, we start to have a little bit of optimism. We're starting to be optimistic. Things are kind of starting to look positive. We've had a few kind of good months here. And then over here, people are talking to their neighbors about investing, and they've made a ton of money in the last few months. So, here we're starting to get really excited. There's some excitement happening. We're pumped. Like there's potentially a bunch of money to be made. We've made money. We've heard about it. Over here, right here, is the absolute peak. It is called euphoria. I have great penmanship, by the way, but that's okay. So right here is the absolute peak. It is the reverse of what's down here called capitulation. It's the absolute peak of the market where everyone is in. Everyone who wants to be in the market is in. Everyone who has a desire to be in the equity market to buy stocks has bought their stocks and they're now in. So the people that are traditionally conservative or balanced investors at this point have called their advisors and they've said, hey, you know what? Sell my bonds, sell my safe stuff, sell my defensive stuff. Let's load up on tech stocks, on growth stocks. Let's load up on equities straight up. I just want to own equities because look how much money I've made. Look how much money I would have made had I been purely invested in equities. So buying, buying, buying. At this point right here, you have a lot of buying and very little selling, right? Once all the buyers are in, you don't really have more buyers, right? There's no more capital that can go in the market. So you end up having a dearth, if you will, of buyers. When you have no more buyers, whoever is selling, right, the sellers, there are people out there that are going to start taking profits here. Guys like us, portfolio managers, the smart money is going to start saying, all right, you know what? Markets are at multiples right now that we don't like. We don't think they're sustainable. We think they're extremely high. So we're going to start selling. So guys like me start selling. We've done this historically. Every time there's kind of stretched valuations or there's maybe macroeconomic fears, it's what we do. And then once you start to have some selling pressure, given that there's no buyers, you have some selling pressure, you start to see that first little dip here. This is the first people that are selling, guys like me taking profits. And this entire period here is profit taking. All right, so now we're here, and we're starting to wonder what's happening here. I'm not worried yet. I'm starting to be a little worried, but it'll come back. I'm not too worried about it. It'll come back. Right here, we have the absolute capitulation. I'll call it capitulation. We're right before the point where everyone is sold out. So this, more sellers, more sellers, more sellers, more sellers. Ton of selling pressure brings this down. The buyers are all in already, right? So everyone who wanted to buy is in. There's no more capital to feed the market. The only people that are moving are the people getting out. So we now have sellers. And what's happening in here is the original people that were kind of maybe more conservative and not super emotional, they're maybe out here. They didn't want to be in the market. You know what? They're out. The people that are left are the people that kind of bought in here and they're refusing to sell. And eventually there comes a point where the swingers, the people that are in and out at some point, they start saying, you know what, I don't need this. I don't need this momentum in my portfolio. I don't need ups and downs. I don't need these big swings. They're starting to sell. Once all of the people that have decided to sell are out, we get this point right here. And this is basically the emotional cycle right here. This is potentially depression. It's also the absolute low point. And when we talk about investing in a low point in a market cycle, it is that right there. Now, I will tell you, it's almost impossible to pick. And if you guys are out there and think you're amateurs and you're going to figure this out, you're going to pick the bottom, the joke I use on BNN all the time is, I have 4 kids at home, and it's almost, I do enough bottom picking at home. I don't need, when I change their diapers, you don't want to try to pick the bottom, but what you want to do is you want to watch for this momentum with capitulation. This is traditionally going to sell at a significant discount on a multiple basis to where you traditionally see stocks sell at. But on an emotional front, what you get here is that feeling inside your stomach where you're starting to get depressed. The last selling happens in here. The absolute last selling. At this point here, pretty much everyone's out. Everyone who doesn't want to be in the market long term, who doesn't want to own equities long term, they're out. They've sold. They've packed it in, they've taken whatever they got, and they sold. So you recall, they were the last ones to get in at this point here, and they were now the last ones to get out as well. So they're emotional. They end up buying at the high right here. They end up selling at the low, and they end up being depressed. Then if we just finish the market cycle here, we get to this point here where, you know what? Regret. If I would have just held on, it's bouncing back, it's going to come back. And then we get to this point here, again, optimism. You know what? This thing will be different. This time it'll turn around. And then we get the same thing. Then they're excited, they buy, and this cycle repeats itself. Traditionally, it has repeated itself quite a bit in the past. So what I'm here to tell you guys today is if you're looking to buy at the low point in the market cycle, it is extremely difficult because of the emotional aspect of it. Nobody wants to be buying here. You're going to turn on the news and everyone's going to be telling you it's the end of the world, there's something happening globally, all the stocks are going to go to zero. Every analyst on TV, every predictor that you know is saying, let's just go to cash, let's just protect capital, let's not worry about it. Professional money managers, this is where we see opportunity. When we see stuff like this and we know that the market isn't moving on a rational basis, just like it's not moving at a rational basis here, that's where we're paid those big bucks to actually come in and buy. And what we would do partly is rebalancing. So you're selling off the bonds that have maybe appreciated in value, or maybe your alternatives that appreciate in value, and you're kind of rebalancing. So you're actually buying equities that are a lot cheaper in value and that are a lower portion of your portfolio. So that's a natural rebalancing tool right here. And the reverse is happening here, but it's also being tactically active with management. So we believe that when you're getting to the point where the valuations are extremely out of whack and the macro factors aren't backing it, that's when you need to, and we sense it as well from our clients. We can sense when people are capitulating. We can sense when people are depressed, and we feel it too, right? We feel it too in the pit of our stomach that, you know what, this sucks. It's not a fun time right now to be investing. So this is the time right here where you want to be investing in the low point in the market cycle. I recognize that this is, if this is something you want to chat about, folks, please give us a call. Go to www.speaktorob.com. We will book a free, no obligation consultation. I love this kind of stuff, behavioral finance and how the actual mind moves and why we make decisions that we do make decisions. I'd love to chat with you about this or anything else in your portfolio, and more importantly, how to protect your portfolio so that you're not exposed to those big swings. How would you do that? Well, you take a look at adding defensive equities. Take a look at adding, maybe some alternatives, some private debt, stuff that doesn't have a correlation directly to the stock market, where it's going to generate a return regardless of what's happening in the emotional cycle. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group. Go to www.speaktorob.com. We'd love to book a no obligation consultation, and thank you so much for tuning in today.